Welcome to the Full of Tracy Money Audio Commentary. This is Owen Tracy recording, and it is 2:29 p.m. and that is Pacific time, and today is March 18th. Well, we've had a couple of big events today. Starting off with Israel hitting Iran's big gas field. In return, Iran said, here are all the different places that we're going to hit, and then they proceeded to hit Bahrain's big gas field. So that puts a bit of a cloud under LNG exports. Of course, they were already inhibited from traveling through the Straits of Hormuz, but now it's going to lengthen the amount of time it takes to get them back on course because of repairs that will need to be done. And of course, then that is upping the ante and raising the question about how do you affect regime change when that regime seems to be pretty well entrenched. So, are we going to see boots on the ground? That is probably the big question. But then, what you also had in here today was the Fed meeting. They did not raise rates. I don't think that surprised anybody. The dot plot now continues to point to one interest rate cut by the end of the year. But the 2-year yield was up nearly 10 basis points. It has now clearly broken the 3-year sequence of lower rally highs. At 3.77%, it is pretty much forecasting there will not be any interest rate cuts at any point over the next 2 years. Well, that diverges from what the Federal Reserve is saying. And having now broken the downtrend and steadying in the region of the 1,000-day moving average, well, this is pretty decent technical evidence that we can expect higher yields. And of course, the implication is that this war in Iran is not going to last only a few weeks, that we might be talking about months. I think that we really do need to see investors beginning to price that uh, in order to or at least in order for the stock market to send a strong enough signal to President Trump that he needs to relent. And of course, then the broad question about whether he would be willing to do that. So we have a lot of moving parts in the markets right now, with the 2-year yield rising and the knock-on effect that that has on the dollar and its strength. Then gold prices were also weak in here today, dropping down through the $5,000 area. Silver was in negative territory. Copper was in negative territory as well.